Hello everyone, this is Jason, aka Junky. I hope this video finds you doing well. It is Saturday, January the 19th. We're going to do a little market wrap, kind of talk about the market this week. I kind of prognosticated what I thought would happen during the course of the week. Let's kind of review, see where we are with the market, and just take a look at things. I'll try and give you some information that's of value while we do the video as well. So we're looking at SPY, which is the S&P 500. And I think I've been telling you all week that this is an area where I'm starting to look for short setups. I'm looking for sell opportunities. And if you look at the chart, the market's done nothing but go up, right? So you say, well, what do you know? The market's continuing to go up. And you're correct. That's what it's doing. Now, there's two things we have to remember here. The S&P 500 is basically 500 separate stocks, 60% weighted towards tech. So if tech performs well, typically SPY is going to do better. And just because the overall market direction is up does not mean that every single trade should be a buy or a sell, right? So for me, on the individual stocks that I've been watching, a lot of them reach levels where sales triggered, and I got into a couple of those trades, and some of them I've won, some of them I've lost. Some of them are still open. I have 8 open positions right now. 6 of them are sells, 2 of them are buys. All of them are in profit. So simultaneously, one goes down and one goes up. Now that's a little bit different than an index like the S&P, because the index is tracking the average of all 500 stocks, right? So this gives you more of a direction of the overall market. Now, these blue lines we identified on Thursday is where I feel that the sellers, and historically the sellers, re-enter into the market. So this is a precarious place to buy. I mean, doesn't mean that you can't buy. And if you were a buyer of the S&P, this individual ETF, if you were a buyer of this, it's just much better to buy down here than it is here. And a lot of the times I think we can make trading too complicated. It should be really simple. Like if you have a bias that says, hey, look, the market I think overall is going up, or in this case, let's say I believe it's going down. That means typically that the moves up are going to be smaller than the moves down. That by definition would be a downward trend. You went from this height to this low. You come back, and you can measure this with Fibonacci. It can tell you, 61%, 50%, 38%, 78%. It can tell you how far you've gone back against this original move down. And there's a certain area historically on charts where if the price is going to continue down, where the sellers are going to re-enter. And the opposite happens on the way up. There could be, if this is the beginning of an up move, this move goes here, and then there's going to be buyers down here waiting to buy it. And they're going to fight with these sellers, and whoever wins is what direction the market's going to go. Our job as a trader is not to predict the market. Your job is to put the odds on your side. It's not about, market prediction. It's about, probability. And so this is a low probability area to buy, just like this would be a low probability area to sell. The job is to try and trade in between the two. Now that's my strategy, and that's what I do. It's pretty accurate. You make sure your wins are bigger than your losses, and have a pretty good win rate. You'll do well. So this is SPY. Let's take a look at QQQ, which is the NASDAQ 100. We put the lines on that one on Thursday too. Same thing. We're in the sell zone. You can see the momentum's kind of waned a little bit, and the body sizes of the candles are getting a little bit smaller, and this is a sign of losing momentum. Also, I use time to mark trend lines. We won't discuss those in this video, but time to mark trend lines are very dynamic. They involve the previous swing high and swing lows of the market to give you a dynamic price indicator. And when your trend line gets this steep, and this would basically be called a demand line, when your demand line gets this steep, typically it only takes one candle to break through it, and that would change the polarity of the market in most cases. It's very dynamic. It's very powerful. We'll do a video at a later date to kind of really dig into that, but time to mark trend lines, you may want to Google that and look it up. It's pretty powerful stuff. Now, here's another thing I wanted to get into with traders. When you're new, you tend to trade with a lot of a lot of indicators, and a lot of people are telling you different things, and it makes it really hard. And a confused mind doesn't really know what it's doing. It's hard to move forward productively when your mind is scattered. So when you trade, the best thing you can do is find a strategy that is simple as possible. Something that's not going to have you, you don't want to be able to, you don't want to have to think 50 minutes to figure out what direction you should be trading in, because everything's telling you one thing and something's telling you different, and you've got divergence on this, and it can get completely insane. My watch list, of all the stocks that I trade are here. Um, and I didn't pick these arbitrarily. I made sure I pretty much had every industry covered, like finance and um, energy and tech, and I try to have a mixture. But I don't have any love with any one of these stocks, or I didn't pick them because I like them. I just grabbed things that were popular. I do like things that have a lot of volume, because the herd mentality, what I learned in foreign exchange, is it's hard to move a currency pair all by yourself. So the larger the stock is, the more it's traded, the harder it is to manipulate by any one party. So I do like to trade stocks that have a market cap over 100 million. There's a few on here that are under 100 million. I think I have Sprint on here, which typically trades around daily volume around 60, 70 million. And I think iRobot, which trades around the same range. But other than that, most of the stocks that you'll see on my watch list trade over $100 million a day. And the reason behind that is because I like more market participants, so that the probabilities of the chart will play out better, as opposed to being easily manipulated by one large order by a seller exiting a position, or a large buyer buying a position. Okay, so there's a method to that madness. But let me show you a quick example on how you can simplify your charts. So as we stand now, at the end of every week, I do a review of every single stock here on my list, and I update the polarity direction of the weekly chart. And every month, I go to the monthly chart, and I make sure the polarity and the direction of that monthly chart hasn't changed. So that's every month that I do that, and every week for the weekly charts. So my opinion can change from week to week, because I'm not trading the market the way I want it to be. I'm trading the market as it is. What is it telling me? It's dynamic. And your opinion of the market should be dynamic. You should not marry any direction or any side of the market and commit to it. What it tells you is what it wants to do is what you should do. So you're looking at this. Let's go back to SPY. I mean, QQQ looks the same, but let's go back to SPY real quick. And, you say, okay, this price has been going up since the 24th of December. And I told you I'm looking for sell positions all week. And all it did this week was go up, right? So Jason, you don't know what you're talking about. Well, you can get really, really confused. The easiest and best thing you can do to make you feel better. Now, if you're a day trader and you feel yourself overwhelmed, and if you're a day trader listening to this, there's been periods where you just felt overwhelmed. You have no idea which way to go, because something's telling you up, something's telling you down. The best thing you can do when you reach that scenario is back away from the chart. Back your time frame out. Zoom out of your chart. You can zoom out, or you can just go up a time frame. And everything, it's like it calms the storm, right? You really, all of a sudden, you kind of know what you're looking at now, just from backing away from it a little bit. And here's an example. So we were just looking at the daily chart. All it's been doing is going straight up, right? And I'm telling you, this is in a sell area. I'd be careful. And all it's doing is continue to go up, right? I have no idea what I'm talking about. So it seems. And I may not, too, by the way. You're wrong a lot when you trade. So that's part of the game. You just have to pick your bias and put the probabilities on your side best you can. All right. But here's what I know. Previously, we had an uptrend. This is a weekly chart now. Let's pay attention to this now. Here's the weekly chart. So the price was going up, 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 up. We reached this point here. We had a little consolidation, and it tested going lower, and it actually made a new high. Then it came down, tested this area. Let's zoom in a little bit. Tested this area here once, twice, third time failed, and dropped down. All right. One could assume that the polarity of this market is at this point down. As a matter of fact, I use a very objective way of determining what the polarity of the market is on every time frame. I pick a polarity based on an objective set of rules. And for me, this chart is down. So you look at the part where we failed at this area 1, 2, 3 times, and you say it's only 2 times, but actually this blue candle here was where the market stopped, went up, hit that area, came back down, hit that area, came down, hit it again. So it's 3 tests here, right? And then it made this ultimate low. We've been coming back up for 4 straight weeks, and now we're in the zone where the sellers typically show back up. We do not know that the sellers are going to show back up and push this price back down, but the probability is higher here that they will than it was down here, which means if we're trading this, our job is to trade the probabilities. So the highest probable setups that you're going to find here are going to be sell position trades. So you're looking for sales. I'm looking for sales. That does not mean, a momentum play is not going to play where it breaks out of here and then it starts running and then you get in. It's just historically, that's just not how price moves. You typically don't get V formations like this very consistently without any type of a retest. So it's about probabilities. And when you analyze charts, it's really, really good to clean up your direction and to understand what you think you should be doing. The best thing you can do is just back away time frame wise. So let me show you a couple of my charts. I'm not going to make this a super long video. So let's look at a couple. This is the chart, this thing that says main here. This is a chart that I actually trade off of. Okay, so it's going to have some indicators on here that you don't see on the other chart. Well, there's not really any indicators because I trade very naked, but let's pull up a couple of them and just take a look. So what I do is I go to the monthly chart first. Every month I go to the monthly chart. I find out what the direction of the market is monthly. The polarity of the market is monthly for that particular stock. And then I note the key support resistance areas. And then I move on to the weekly chart. And then I do the same thing with the weekly chart. And I do this every week and every month. So at the beginning of the month, I go through every single chart and I change the support resistance areas. And I actually update the polarity. If there's a change in polarity, I want to know that, But what you find is, like with the SPY right now, the market's been going up, 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 and up, but the polarity hasn't changed for me. And like I said, I use a very objective tool that tells me what the polarity of the direction of the market is. And for me, it's still down. And now it can prove itself to be up. It continues going up next week and breaks through, trend lines and does all that kind of stuff. Then now you have to adhere to that, but for as of right now, the higher probability trades are going to be to the downside. And it has not changed. And every week though, it can prove something different, right? So you're going to be wrong sometimes. That's part of the deal. There's no system that's going to be right all the time. So let's take a look at, so what I do to make my charts very simple is to keep them very clean. This is Newell Brands. Okay. What I do is I identify my monthly resistance areas or support areas with these red lines, and I'll identify my weekly areas with the blue lines. So what this means is the red lines that you see here were already drawn in to this chart on November the 1st. On November the 1st, these red lines pulled up on my chart as the resistance area for this stock. Okay. Now it went up from the 1st of November basically all the way until the 3rd of December. Price did nothing but go up on this chart. And you can get lost in the woods when you're not looking at a larger time frame, because on a daily level, the only thing you know about this stock is it's going up. And a lot of the times you don't know where it's going to end. But by using the monthly chart, I identified that this zone here, while I was trading it daily and weekly, be careful when we got up here, because this was where all the sellers were going to be from this larger move that started up here and came down here. And you have to, it's like creating a roadmap for price so that you know what's going to happen or not what's probable to happen. And what happened is price came into that zone and it slowed down. You got a little bit of reversal. There's your retest, and then it dropped. But here's something that's ironic. Down here, there was support. You see the move from here to there, from this move down here to the top. So this is powerful stuff. So this is from this move down to here, there's going to be sellers right here for this monthly long-term move to re-enter the market. However, the move from the bottom to the up, the retracement of this move, also creates new buyers down here. So this is a perfect example of the market turned, went to the area that we felt this is a monthly area, resistance area. Be careful buying here. The market reacted, and then it came down to the area that we identified here as be careful, there's buyers. Now, who knows what the ultimate direction of the market is, but there's all types of money to be made here. There's money. If you knew that this area was a sell area, there was an opportunity to get in short on this retracement right here and make a lot of money here. When this market's polarity changed around right here, I actually took this trade, by the way, by identifying this area, knowing it was here before the price came here, because we knew this was here when price was up here. So when price got here, when you get a trigger to go long, you go long and you win there. And conversely, this move, there's going to be sellers. Let's take a look. There's going to be sellers somewhere in here for this move. Now, eventually somebody wins and the market picks a direction, but you could be right 2 or 3 times before you're wrong. And knowing these zones is very, very important. And so the best thing that you can do if you ever feel yourself flustered or frustrated or not understanding what direction you need to trade, just zoom out of your chart and look at the bigger picture. And it'll really, really help you out intraday. So when I pull up SPY and I look at SPY on a weekly chart, and I look at it on a weekly chart, what I see is a price that went way down. And this is the first major pullback. And historically, there's going to be sellers here. Here's the monthly resistance. Here's the weekly resistance. So from this blue line to the top here, historically, there's a bunch of people looking to sell in this zone. So if you're buying here, be very careful. You typically want to buy down here, not here. Now, when we get down here and the buyers are waiting, who knows who's going to win? No one knows the direction of the market. But again, you're playing probabilities. Okay, so hopefully you guys learned something from that. If you like the video, please hit the like button. If you're new to the channel, please subscribe. We're going to do this every week. My bias on the overall market is still down. Like I said, I have 6 trades open short, 2 trades open long. As I did my weekly review of all my stocks, a lot of them, the polarity on the weeklies have changed to up because of last week's move. And typically if a market's going to turn up, it's going to turn up first on the daily, then it's going to turn up on the weekly, then it's going to turn on the monthly. So it could be a precursor, because almost all of these charts, because we've been in a downward move basically since October. So almost all of the charts monthly areas show we're in a sell or a bear market. But if it's going to go back bullish, it's going to start on a weekly and daily level. And a lot of my charts change to weekly buys, which could be good for people that have 401ks or have a buy bias and are only on one side of the market, right? So that could be good for them, and that's good for the economy and the market in general. So that's cool. But caution this week and right now because of where we are. But that's not to say that price won't have a reaction here, come back down here, buyers re-enter, and we push further higher. No one knows where it's going to go, but play the probabilities, guys. Study your charts, figure out where price tends to move. Price action is king. Everything that the big major players in the market are doing is reflected in the price. The price is a cumulative decision of the market. It's not any one person pushing it one way or the other. Collectively, we decide what the value is based on our buying and selling, supply and demand. That's the market. So like the video, subscribe to the channel. We'll be back at next week. Oh, also follow me on Twitter, because what's going to happen is next week we're going to go live and we're going to do charts live, like I told you. And I'll announce on Twitter at what time and what day I'm going to do it. So I'll put my Twitter handle in the description box. Follow me on Twitter. So when we do go live, you can follow us live and tell me which chart you want to look at. We'll pull up any chart you pick, that as long as I can pull it up, and we'll analyze the chart and I'll give you my opinion on it if you care. All right. It's good talking to y'all. Have a good Saturday. Enjoy your weekend, and see you later.